Hello friends, welcome to my channel. In this video we are going to discuss about gold as an investment option. In this video we are going to cover these 5 items. So the first thing is the relation between gold and the currency, how these two are related, okay? And second thing is I'll tell you some important facts about the gold. So with this you will understand why gold is valued, okay? And the third thing is we look at gold as an investment option. We'll understand the pros and cons of considering gold for the investment. So the fourth item is ROI, return on investment. So we will see how much returns is given by the gold in the history. I will show you the data of last 30 years, the ROI on the gold. And then the fifth and the most important thing, I'll tell you the best way to invest in the gold. So let's continue. So the first item, relation between gold and the currency. So let's understand this relation. So the first thing is gold has been used as a currency for generations. If you look at the history, almost all the countries in the world used gold as a currency. Okay, not just India. Almost all the countries used gold coins as a currency for trading. Later, the paper currency was invented because trading the gold is a very difficult affair. Okay, but the paper currency doesn't have any value by itself. If it has the value, then the country would just keep producing the paper currency. But there is no absolute value of the currency. Okay, it is completely backed by the gold. A country cannot produce any number of paper currency. It all depends how much gold that country has. Only according to the gold reserve they can produce a paper currency. If any country keeps producing the paper currency irrespective of the gold reserve, in that case the value of the currency of that country reduces in the international market. Now this is very important thing. See, as of today, the gold and the currency are not related. As I told you, the paper currency was backed by the gold, but this is only a history. As of today, this is not related. Okay, see, the paper currency was invented in 17th century, and by 18th century, the paper currency was adopted by almost all the countries in the world. And this paper currency used to be completely backed by the gold. And this concept used to be common for all the countries in the world. Okay, but in 19th century, this relation between gold and the currency has been broken. Now the gold and the currency is absolutely independent. Okay, so there is no guarantee from the government that the gold which you buy can be exchanged for the currency. So the next is, see, every country maintains the gold reserve. Although the gold and the currency are not directly related, but gold is still the basis of the economy of any country. So every country, including India, maintains the gold reserve. The last thing is, gold is a very important factor which defines the capital power of any country. Okay, so for any country, it doesn't matter how much paper currency they have. What matters is how much gold they have. Okay, let's move further. So the second item is the facts about the gold. So let us see some of the important and interesting facts about the gold. So the first thing is the gold is a rare metal. It is not easily available. It requires huge amount of mining to extract some amount of gold. Okay, so although it is rare, it is available in the sufficient quantity for its use cases. See, the common use case of the gold is ornaments and the antique item. So for those use cases, the availability is sufficient. See, being rare is very important. If something is easily available, then that particular thing is never valued. So it is one of the uniqueness of the gold that it is rare but yet available in the sufficient quantity. So the next is gold never catches rust. Next is gold never degrades. Doesn't matter how long you hold it, it never degrades. The quality of the gold never reduces. Now this is very important factor. See, the melting point of the gold is very low, plus it is a very soft metal, so it is highly moldable. That is the reason it is most suitable for the ornament. So although it is soft and moldable, it is very strong. So the last and the obvious thing is it looks good. Aesthetically, gold looks good. Let's continue. So now we are coming to the important part of the video. Let us look at gold as an investment option. So let us first discuss the pros of considering gold as an investment option. So the first thing is the price of the gold remains same in all the countries at any given point in time. Okay, so whether it is American country or European country or Asian country, it doesn't matter. The price remains same across the borders. Okay, you will definitely find some variation, but that variation will not be more than 10%. Okay, now this translates to a very obvious and important fact that the value of the gold is not directly dependent on the currency value of any country. Okay, next is the gold is free from inflation. Okay, see, inflation is a problem within the country, but we have seen that the gold is not dependent on the currency of any country. The value of the gold remains same across the borders, so it is free from the inflation. Okay, next, and the very important thing, the gold is free from the economic collapse of any country. Even if the value of the currency in your country becomes zero, still the gold will have value in the international market. Okay, let's move further. Now let us discuss some of the cons of considering gold as an investment option. So the first thing is, there is no absolute value of gold. See, we have to understand that gold is just a metal. So there is no use case of the gold in general, and hence there is no absolute value of gold. The value of the gold is defined by the people. How much other people want to pay for the gold, that's the value. So the next is, the gold is not a commodity. Okay, let's say if you have the steel or iron, then there are industrial use case. But if you have the gold, then there is no industrial use case. So that's why I was saying there is no absolute value of gold. The next problem is the risk of theft. Plus you have to pay the cost of storage. If you're opting for a bank locker or something else, then you have to pay the cost also. So the next is, see, gold doesn't generate any money. But let's say if you're buying a house and if you give it for the rent, then you will earn the rent. Next is, the appreciation isn't guaranteed. We all understand it. Okay, there is no guarantee that the value of the gold appreciates over the time. Now the last thing, this is most important. See, there is no buyback guarantee of the gold. If you are buying gold, then there is no guarantee that you will be able to sell it. Okay, from the government point of view, they are absolutely not liable to buy it back. Okay, and if you are relying on the gold shop, there is no guarantee that they will buy it from you. Okay, usually what they do is, when you go to them, they will say, we will not buy, we can exchange. You give us some amount of gold, in return you buy more gold. Okay, so my point is, they are absolutely unreliable. We cannot depend on them. Okay, you cannot just go to them and exchange a gold for the money. Let's move further. Gold ROI analysis. Okay, ROI, the return on investment. So let us see how much returns gold has given in the history. Okay, so this slide is showing mainly two things. One is the gold price in the history, also the ROI. Okay, so this data is for last 30 years. This is first decade, the first box. Okay, this is second, this is third decade, and this is for the future prediction. So in 1990, this was the price. In 1995, this is the price. These prices which you see, these are for the 10 gram of 24 karat gold. Okay, this was the price in 2000. Okay, and the second box is from 2001 to 2010. Third box is from 2011 to 2019. So you can pause the video and watch the price. Okay, the price is not the focus is mainly the ROI. Okay, so in first decade from 1990 to 2000, the appreciation was 30% in one decade. Okay, so the yearly appreciation was 3%. In next decade from 2001 to 2010, the appreciation in the gold price was 400%. That means the yearly appreciation was average to 40%. Okay, in current decade from 2011 to 2019, the appreciation is about 50%. So the yearly appreciation in the gold price is 5%. Now based on these data, we can predict the future appreciation. Okay, so let's assume in 2021 this will be the price. Okay, in 2025, in 2030, this will be the price. So the ROI, considering this trend and also considering the fact that this is the time of globalization and internet. Okay, so don't expect any magical ROI on the gold. So the appreciation would be 25 to 50% in the whole decade. So the yearly appreciation would be 2.5 to 5%. Okay, and also remember, this is just a prediction, that too a positive prediction where we are seeing the appreciation. But remember, there is no guarantee of appreciation in case of gold. So let's move further. Okay, now the last and the most important part, best way to invest in gold. So the best way to invest in gold is to buy the paper gold. Instead of buying the real physical gold, it is better to buy the paper gold. And in case of paper gold, the best option in India is the sovereign gold bond. So let's understand more about the sovereign gold bond. So sovereign gold bond, see, this is a scheme from Government of India. It is managed and regulated by the RBI. Okay, so in this scheme you can buy the paper gold instead of going to a gold shop and buying the physical gold. Here you can buy the paper gold online from the government. Okay, now let us see some of the key highlight of this scheme. Okay, so the first and the important thing is here you get 2% annual interest rate. Okay, see, if you are buying the physical gold, then when you are holding it you don't get any return. Okay, you have to sell it to get the returns, but here you get continuously 2% annual interest rate. Okay, next is the maturity period is 8 years, so you have to hold it for about 8 years. Okay, and if you hold it for 8 years, in that case the capital gain is tax free. So let's assume you bought the gold at 30,000 and when you're selling the price is 40,000, so the difference, that 10,000 of profit, is absolutely tax free. Okay, next is the lock-in period is 5 years. That means after 5 years you are free to sell the gold. If you are selling before 8 years, then the capital gain is taxable. Okay, next is the interest is always taxable. So the 2% interest which you are getting, that is taxable. Minimum you can buy 1 gram and maximum you can buy 4 kgs in one fiscal year. Fiscal years means 1st April to 31st of March. Okay, and how do you buy it? You can buy it online using net banking of any of the nationalized bank. For example, HDFC, ICICI, SBI. You can use the net banking of any of the bank and buy it online with just few clicks. Okay, every month this sovereign gold bond is open for the subscription for about 4 to 5 days. So you have to just Google for those days and then buy in those days. Okay, so these are some of the key highlights of the sovereign gold bond. Let's move further. Let us see some of the benefits of buying paper gold over the physical gold. Okay, so in case of paper gold, you are generating regular income, you are getting 2% annual interest. Okay, now this is very important. There is a buyback guarantee from the government. Okay, if you are buying the physical gold, there is no guarantee you will be able to sell it. Especially there is no guarantee that you will be able to sell for the right price. But here the gold bond is exactly linked to the market price of the gold. Okay, next is there is no storage risk. Okay, there is no storage cost. You don't need a bank locker to store it. There is no GST on buying or selling the gold. If you are buying physical gold from a gold shop, then you have to pay the GST. And the last is there is no loss in the making. See, when you are buying the physical gold, whether it's a coin or ornament, there is always some making charges, plus there is always some wastage while molding. So in case of paper gold, you are free from all those losses. Okay, so that's all for the video. Thanks for watching. If you like this content, please hit the like button. Do subscribe my channel for more such videos and share with your friends and family. Thank you.